what makes you really valuable with these founders is not that, that I just spent 3 hours on ChatGPT informing myself on a particular industry, right? What makes you really valuable, your value in the end of the day as a VC investor is the quality of your network. It's as simple as that, right? Who trusts you? Which doors will you be able to open for these founders? So you can be an extension of them, right? Life is tough as a founder, right? If you have people that somehow help you and, cheer for you and open doors on your behalf, that makes your life a little bit easier.
So welcome to this week's Leaders on a Mission. And today on the show, I'm joined by Irena Spazzapan, Managing Partner of Systemiq Capital, a firm really driven on driving systemic change, really through climate investments, climate and food, energy investments. And really delighted to get Irena on. I mean, look, this is our third time, Irena, right? So like fire drills and other things. So I just appreciate you bearing with me. And we're going to have a great conversation. So I'd love to explore. We're going to explore your journey, I suppose, from energy and finance to venture capital, really understand the investment thesis of your fund and the sectors that you're most excited about. So thanks so much for coming in today.
Thanks for having me, Simon. Looking forward to.
Excellent. So tell me, just give me some context. Looking at your background, right? Lots of energy, finance, now venture capital for the last, I think, 8-9 years. Well, what were the key things, key experiences that led to you kind of founding Systemiq Capital?
This thing, there are some people that deeply believe that what you end up then doing in your adulthood was seeded when you were still in your childhood. Yeah. And I believe in that. People are driven by these very sort of deep motivations that were perhaps there for a very long time. I think, I grew up in the northeast of Italy, in Trieste, in an incredibly, international setting, because I was, I grew up speaking more or less 3 languages, of which English was not one of them. And so it was, I always had this kind of luck to grow up with an open eye on the world, and with perhaps, a strong feeling of what were the big issues of the time, which, somehow teared apart, my family, back in the past. And so it makes you more aware of, the kind of issues that really you should be spending time on, right? Because it's not just about your personal individual life, but it's kind of bigger than you. So I guess when I was a university student, I did 2 kind of placements, kind of as an intern, in the summers. When I was growing up, my dream was to be some kind of a refugee worker, because my family were refugees, and so that's kind of what I wanted to do. And so I spent the summer in Africa as a 19-year-old, and I realized, I don't really like that kind of little micro work, looking at, how you're gonna put the fish farm together and stuff like that. So then my second work placement was at the UN, and I worked for a refugee agency in the Middle East. And that was to an extent also awful, because I came up with the massive, bureaucracy of the UN, and because I was on the finance side of things, I could see how the money was just massively inefficiently spent, and there was no meritocracy, nobody did any work. It just felt like a massive waste everywhere. And that was my first and only, public kind of level work that I will ever do in my life, because it is really quite upsetting, to see the waste. But when I was working in the Middle East, I guess I was a 20-year-old or something. I lived in Syria, but way before the war, and we had this UK embassy has this group of international people that get together. I forgot the name of it, and you go drinking and running and hiking at the weekend. And at the time, the biggest expat community in Syria were Shell engineers who were doing exploration in the deserts of eastern Syria. And so they became my friends, and those are the people I used to hang around with. And they created, this kind of long-lasting interest in energy, right? And so I then started connecting when I went back to university. I then took a lot of energy courses, and then I decided that that's what I wanted to do. And that I was a 20-year-old. I had really no idea what finance was, right? I didn't know there was a big difference between a commercial bank and an investment bank, or what all of this was. I grew up in a very small town in Italy. But a friend of mine had just done his summer internship at Goldman. And he told me that they have this commodity division. And so I applied, and then I became a summer intern. And then I ended up staying there for 13 years. And I guess, remember my previous experience was at the UN. Yeah. And so going from this like massive inefficiency to extreme lean efficiency, I just like felt like a fish in the water. Yeah. So those were my people. I guess the love for energy has never gone away. Right. That's I am genuinely deeply interested in anything to do with energy, particular the power side of things, because that's where I sort of ended up channeling quite early on. And then, the second sort of I was never an environmentalist. In the 90s when I grew up, environmentalism was not one of the, Zeit issues of the time. But for me, things changed when I had children. Yeah. Then all of a sudden you're like, right, okay, it's not just about where my next P&L for the next 3 months will be. This is a little bit of a longer term issue now. And so I had my first child in 2013. I took very short maternity leaves on both, but in between my first and second child, what happened was 2016 was this momentous year when you start having the first PPA in the Middle East, $10 a megawatt hour, right? I remember we used to laugh at this, European PPAs at $400, $500 a megawatt hour, right? It all felt like a massive waste of money. And before you know it, it goes to $10, right? Tesla goes public. All these batteries, you start seeing that there's this new wave of batteries coming from China, massively expensive, but all of a sudden you have a curve, you can project that it's going to go the same way of solar. It's 2016, I start seeing the smartest people in the utility, in the power industry are all going there. And I felt I wanted to be part of the future, not of the past, which my work at Goldman was very much related to power assets, which was not necessarily the most innovative thing out there. And so I decided that was going to be next. And, obviously going from Goldman commodities to some kind of innovation wasn't going to be. In 2016, just when Clean Tech 1.0 was completely decimated, I believe that there was maybe 1 or 2 funds left globally, right? It was completely decimated. It wasn't the most obvious. It was obvious that if you were to do anything, you had to start it from scratch. And at the time, Goldman had an internal VC fund, they might still have it, that was investing in strategic businesses that would be adding something to the tech, the internal trading tech. And in power at the time, we had this issue where we couldn't trade intraday power, right? There was this day ahead window. And you could manage it to an extent with our SecDB, which looks like a 70s booking machine. And you could, to an extent, back it off with Excel, right? But once you went to the intraday dimension, the whole tech system collapsed, right? But if you went through the Goldman tech queue, you'd be there for years, yeah? And you couldn't even go to New York and say, oh, this is going to be 100 million P&L next year, because it was still a developing young industry. But I then spent this fascinating year meeting, this demand response and power flexibility. There were not many, but there were some. Many actually had Goldman alumni in them too. And once you go on that path, there is no way back. Yeah,
Right.
And so that's when I then met Systemiq's founder, who just took out his business out of McKinsey, and then they wanted to build an investment side to the consulting side into, and that and that's how everything started back in 2017.
2017, wow, yeah. So tell us a little bit about the fund, Systemiq Capital then, right? Tell us a little bit around the investment thesis and the sectors and technologies that you're really interested in.
So we look at 3 themes. We specialize, my my bucket is the energy bucket, and my two colleagues look at the other two, and I'll tell you more about. So first of all, we only do B2B. We don't touch consumer. We don't really know much about consumer, and no one here has that particular interest. We also look at asset-light businesses. We are not interested, in the next electrolyzer, the next fission. We just don't like capex-heavy type of businesses. So with that, context, we look at three themes. One is electrification, right? That's the bit that I spend my days on. And that's very much the world of industry, of buildings, of transport getting electrified, waste coming down, right? Because you don't have combustion. People, households, it's industrial clients becoming both consumers and producers, right? That's the world. George, my fellow partner, looks at what we call decoding nature. And that's very much the piece around how do you start extracting data from both biodiversity, from the wild nature and from agriculture, and use this data in a smarter way to make the materials the food of the future. And the third piece, which is what my colleague Louis looks at, we call it applied AI to mainly the built environment, right? So how do you use software AI, to bring data to these deserts that are buildings, industries that don't really use that much software, and then start making the utilization of these assets a lot more productive, right? Those are the sort of the three areas. We essentially look at the technology angle around climate, technology understood as tech, not as, some kind of machinery. And over time, we'll be adding more themes as the technology landscape evolves. Whatever it might be robotics, it could be in the future quantum, whatever it might be, right? That's our angle.
Got it. Okay, great. And you mentioned there about kind of not investing in an asset-heavy business. Well, how come? Why not? Is that not good? Is that not a good business to be in these days?
We had, in Fund 1, so back in 19, we did 4 capex-heavy businesses, all in the US. Some of them ended up being incredibly recognizable names. We were the first check in Zoravia. We did Charm, we did Brimstone, and then we did Microbar, which is the one of the 4 that actually folded since. Those businesses are very, very dilutive. Yeah, and so even as the valuation goes up, you end up being incredibly diluted. And if you want to follow on, then every subsequent check is going to have a smaller return. And so we find it very hard to believe that you can create venture returns with that, right? So we believe that those are early infrastructure like businesses that are more suitable to a growth infrastructure strategy. And there's funds like this out there. We are not one of them.
Yeah, got it. I thought, though, with these businesses, there was a lot of non-dilutive funding for them, there was. That was probably...
We never touch anything that has to do with government,
Right. Okay.
Like whether it relies on a particular regulation or relies on particular subsidies, not for us. We have our fund is a 10 plus year fund. This is beyond any cycle, any election cycle. Yeah, beyond any economic cycle. So you always have to back technologies that are going to be viable in a long term, right? Not just because they are hot in that particular moment, right? And I think, we're going to talk about the hype and all that in this industry, but you always have to look in the long term and avoid this IRA hypes, AI hypes, whatever it might be, right? Because they inevitably always deflate.
Yeah, absolutely. And so maybe just tell us a little bit about, like you mentioned the electrification space, like particularly as an area that you're big on. Where are we on the journey? You hear about a lot of consolidation in the industry as well at the moment. Where are we on the journey? If you look for the next kind of 10 years or so with this.
Yeah, look, what we look at is, in particular, the enabling businesses around really 3-4 technologies, right? Renewables, batteries, heat pumps in some countries, and EVs, right?
Yeah.
We are not interested in this other green premium stuff, whether it's hydrogen, ammonia, or fusion, or nuclear. We don't look at that stuff. So in this, the 4 workhorses of the transition, which are in the money and working, obviously we've gone a long way. Globally, the numbers are still not so great, right? Because 90% is still fossil fuel based. But beyond that, you are moving towards grids that are going to have 50, 60, 70, 80% penetration of power, right? From a system that today on average uses less than 20% of primary demand, energy demand is today covered by electricity. So we are moving into a world that becomes much harder to generate. And look at the Spanish blackout this week.
Yeah, that's been crazy this week, right?
We don't know. I think the most plausible explanation I've heard is inertia, right? Which is this idea that as you don't have this, spinning thermal plants anymore that gradually wind up and down, something went wrong there. Who knows? I guess it's going to take, a few more weeks to find out what really happened. And that's maybe a disaster scenario. I remember in 2003, we had in Italy a massive blackout for 24 hours because a tree fell on a line coming from Switzerland. It was very hot, which means that, stuff, right? This is stuff that impacts really, like the daily life. And people perhaps don't realize how crucial power is to everything, from payments to trains, to airplanes, like nothing really works without power. Yeah. And power becomes much more complicated because instead of just having, I have a nice gas station that supplies power to this city, all of a sudden you have like hundreds of distribution points, and distribution points can also become consumption points, and energy keeps going back and forth with no inertia, right? So stuff goes like 0 to 1, 1 to 0 immediately. At the same time, all transported on a grid that on average is only used half of the time, right? We always talk about cars that are disgracefully only used 4% of the time. But the power grid is also not such a greatly utilized asset. Yeah. So there's all these challenges that are really only solvable with technology, right? And that's kind of the big great opportunity. You also have silos. The Renault didn't really have to speak to EDF, right? Those were very separate businesses. Now, all of a sudden, they share the same customer, right? I buy a Renault electric car, I buy power from EDF as a French citizen. I'm the same customer, and that's not how they think, yeah? And so usually when you have this kind of siloed industry, that is perfect territory for startups to emerge and, really take this new opportunity away from incumbents.
Yeah, it's fascinating. Very different business models, as it were, when you mentioned there, for instance, like something like like Renault and EDF coming together and sharing the same customer.
Oh, they won't. It's not going to happen, which is why it's for startups to take that opportunity, to take their customer, right, and sit in the middle. Yeah.
Yeah. Maybe give us a couple of examples of like either companies or technologies that you've invested in that you're really excited about, and we could just kind of explore that in a bit more detail.
Yeah, sure. I'm very happy to give some examples in the in the electrification space. So one of our investments is called OHME, OHME. OHME is now Europe's biggest residential EV smart charging company, active in 10 different countries, done incredibly well. And, if you look overall at the EV charging space for investors, it's been just like a terrible bonfire of VC and growth equity money. It's really been quite terrible. And so you have to think, why is OHME different? And I think the answer is kind of very much that belief that we hold so dear, which is asset light, built on software. Yeah, you can have a hardware element. We love there's a hardware element. It brings you proprietary data as opposed to just injecting everything else, all the same data that everybody else. But this is not the core, preoccupation or differentiation of the company. We have another business in the US in Chicago called ElectronX. Which is going through the approvals to become the US first hourly power exchange. So it's a derivative exchange, a bit like ICE, but on a smaller scale to really enable these distributed assets to come and hedge their risk, which is also fascinating. Have you heard of the Silicon Valley of energy in this tiny place called Aarhus in Denmark? Have you ever heard of it?
I've heard of Aarhus, but no, I haven't heard about the Silicon Valley of energy. Tell me more.
Aarhus is this tiny. I've never been. Isn't a Lego factory there or something? I've never been. But there's been a lot of these energy trading startups, effectively, that sprang up in the past 10 years that have become really large companies. Many of them are now part of much bigger balance sheets. And essentially, when I left the power business, 17, there was no intraday power. It was just not a thing, yeah? And algorithmic trading started, but it was very much, FX, equities, right? Very different assets. Fast forward now, I think intraday power is now 15-20% of all power liquidity in Europe, massive. And it's primarily led by these companies that did not exist 10 years ago. Yeah, which is fascinating. And, we are so good at Europe at bashing ourselves, telling how bad we are. Yeah. That actually there are some real champions. It's just nobody talks about them. Most have not gone through the whole VC hype of raising tons of money. And so they have been able to grow large in a more bootstrapped way.
Okay, yeah, absolutely. Because this is half the challenge, right? It's like when I look at the market over the last kind of 10 years or so, it's the kind of hype cycles that is driven, I suppose, by, the promise of really solving one of these problems where maybe the tech isn't quite developed and valuations just get crazy and the company's just got nowhere to go. There's just a litany of failure out there, right? So, it's really interesting you talking about this. Where else do they raise money from if it's not through kind of VCs?
Oh, look, those particular companies, I think, were mainly bootstrapped. And then I think, one was acquired by Equinor. Goldman has one. They sort of sold bigger balance sheets. Because as a trading business, balance sheet is everything. Yeah, it's very hard to operate if you have nowhere to go to hedge your risks. That's a particular case in point, but it's a momentous change that has happened in front of our eyes and nobody talks about it.
Yeah, absolutely.
Energy is the one piece where Europe is so much more ahead. Power, in particular, is the one space where Europe is so much more ahead than any other region in the world. Yeah, we are the most liberalized market overall. The UK, perhaps, the most. As ever, necessity is the mother of creation. Yeah. UK is an island. It had to sort, with very little gas storage. And so it had to find a solution that in a way was perhaps not as needed in Germany, that is connected to all other countries around it.
Yeah, absolutely. I've never thought about that with the UK, actually.
We just like deprecating ourselves, but it's not also bad.
What do you measure that on, though? When you think about the UK and you think about it being advanced, what's that based upon in terms of output and?
It's also in terms of competition. If you wanna, you can change suppliers in your home very easily, right? It's it's easier than buying a new car.
Yeah.
It's also measured by look at the perhaps the world's most famous neo utility is here, right? Which is Octopus Energy. That's a British Tesla, whatever you want to call it, right? I don't think that Greg is necessarily a well-known tech personality in the European public, but we have those stories here. Yeah, it's just that we don't like to talk about them.
Yeah, maybe we should. I think maybe in the UK we're a bit more, you're right, self-deprecating is the word, isn't it, really? Don't shout about things so much from the kind of rooftops Is that constitute most kind of UK businesses that you look at and invest in, and just your understanding of the ecosystem?
Look, we have, about half of our portfolios in the UK. Most of the rest is in the US. We have very little, we have a few things in Ireland. We have one company in Austria, but it's UK, US. And, we look at all those three themes that I looked at. So it's not just energy, but I think, coming back on that point, there's a very large difference, between European and US founders, perhaps with the UK sitting somehow in the middle. US founders will listen to a typical European pitch and they will think, oh, that's a not ambitious person. Yeah, they will say, we are one of the companies doing something. We will be doing this, right? And it's not the hockey curve that you usually see. In the US, it's always, I'm the only one, I'm the best, we're changing the world, in a much more optimistic, perhaps, way. And so that's a big barrier, right, to investing across the two. UK sits somehow in the middle, right? I think we learned from the Americans, but it's still, the US, the British style is just not bombastic at all. Yeah, so you also have to. And so I feel incredibly privileged that we get to speak to these founders from across the pond every day. It's a different style, but then in the US, you always have to go through the crap very quickly, and what is really going on here. And then in the US, in Europe, you have to understand what the real ambition of these people is, right? So it's a slightly different exercise.
Absolutely. And what about ecosystems? What about that kind of foundry of, the entrepreneur, the flourishing kind of entrepreneur? How do you think the kind of UK, looks like as it relates to that kind of that strength, as it were?
Look, nothing beats the Silicon Valley. It's just incredible. I'm fortunate to go there a lot, and the ecosystem between the VCs, the founders. I'll give an example, which I think is kind of epitomizes this. The typical UK founder, they have a big exit. Maybe it takes them 20 years. They get a big exit. What they're going to do? Typically, and I'm not saying everyone, they will move their residence to Monaco and they will buy a yacht, right? Something like that, yeah? What does a typical US founder do when they have a big exit? They will give back to the system, yeah? They will mentor back new founders to be the next ones. That doesn't really happen here, or very little, yeah?
Why? Is that just a tax regime? Is that more?
No, I think if you sit in California, it's not exactly a low tax regime. It's cultural more than anything.
Yeah. But we see this in Boston as well, right? I mean, I see this if I look at some of the venture kind of plays and some of the kind of technologies out of MIT, for instance. That's a beautiful kind of system as well. I see so many entrepreneurs coming.
Yeah, and it's because there's this peer pressure in a way as well. You have to give back. You're part of a particular circle and you give back. There's very little of that. There exists, don't get me wrong, especially younger founders. If they have an exit early, they will do that a lot more. The more seasoned founders, all right, in Europe, it sometimes takes longer to exit. Then this is less prevalent. But things are changing, right? I think there's also a lot more, you've heard this thing, Project Europe, right? Those are relatively young founders that got together. They're not all founders, but relatively young founders that got together. And there are some people that are doing incredible work, to really change the narrative. And it's not the narrative, it's really, the way things work practically. But it's a lot less. I would say here is way more siloed. Overall, Europe is way more siloed than the US.
Yeah.
People get together in their particular verticals, in their niches. They look at each other's plates in a way that I see in the US somehow less.
Yeah. Although the ecosystem is definitely evolving and changing over in Europe. But there's almost like a risk appetite, isn't it? Like over here. It's like, you think about it, right? Most people employed in Europe have a 3-month notice period. Kind of risk.
Yes.
It doesn't come that easy. When you're at will over in the US, you're kind of
100%.
That's a fundamental kind of cultural difference, isn't it, really?
Yeah, and again, the UK sits somehow in the middle. Yeah, we are quite far from the more socialist EU. It's a little bit more in the middle. But this might change because we are going through one of those years that will go down in history as, like a historic year. So who knows how we come out in the end of that.
Yeah.
You could end up the year when you have like a massive inflow of students escaping US academia coming to the UK. Like, I don't know, in London, there are Americans everywhere. Like if we go around the weekend, they are everywhere. They're coming like in big throw. So things are changing. Yeah, it's just we are in one of those moments where it's difficult to read the long-term change of this.
Yeah, absolutely. And tell me, just looking broadly, at things. I know we touched upon this when we spoke last time, but I suppose venture investing. Yeah, it's been. If you look at the category, right, of venture investing, it's been a tough space to be in over the last few years, right, with the kind of economics. With high interest rates, with inflation, with it's been really tough. Where are we at the moment on the venture? Kind of how's your fund performing? I suppose I should say. Let's be a bit more direct around things.
Look, we are very fortunate. Both our fund 1 and 2 are in the top 20% of performance. So we are very happy with where we are. We've had several exits and, general, because we're mainly asset light, this whole tariff thing has been less upsetting for us than many of our peers. I think, VC in general is going through a massive concentration period. Yeah. As of Q1, more than 70% of all VC funding went to 100 million plus rounds. Yeah. Sometimes they're seed rounds, sometimes they are, OpenAI style, but these are very concentrated. Of course,
Did you say 70%?
Mm-hmm.
70%.
Of course, it's all AI.
Yeah.
It's all AI. And equally, if you look at the fund side of things, the numbers as of 2024 suggest that I think it's 80% of the VC money, if not more, went to the top 20 funds, which are multi-billion funds. And so effectively, you have almost like a schism, right, in the industry, where you have these like giant funds that pursue highly concentrated, almost private equity-like strategies that are really in the business of finding startups that will be able to take on as much AUM as possible, right? So we call that's the AUM business. Yeah, you are in the business of charging a 2% fee on as much AUM as you possibly can, and hopefully you make a 2-3x out of it. And then you have the, sort of the other VC industry, which is smaller funds, right, where you have like a tail end of thousands of funds, right, where we are in, where the statistics are equally stark, right? I think it's only 16% fund ones will ever get to a fund 4. Yeah, so it's equally stark on the other side. And that's where you can play in a different league, right? Where you say, look, I'm going to come at a business at a 20 million valuation. They're going to sell it at 300 million valuation 5 years later. That's a good outcome if I have a 100 to 100 million fund. If I have a billion fund, I'm just wasting my time. Yeah. And so you almost have two parallel VC industries that almost have nothing to do with each other. And, the only way would be, if like a more smaller fund would enter, would do a seed round, which would then be taken on by the big ones. But that is happening even less because there's so much more of these giant seed rounds that raise a ton of money at the get-go. So, you almost got to a point where when you say venture capital, it doesn't really mean anything, yeah? Because effectively you have this massive difference of how people operate within seemingly the same asset class.
Yeah, absolutely. And tell me though, if we were going to bring it back to the world that you play in, right, across your sectors, how does that influence specifically this kind of domain that we're talking about as well? Is it the same? Because I read... Like some of the big raises you see out there, there are some really big stuff. All of a sudden you'll read like 150 million, 200 million, and you'll see some really, really big stuff. And then you'll see a lot of kind of seed, kind of, smaller seed stuff. There doesn't seem to be much kind of like later stage, Series B, Series C, almost. It just, I don't know, it just seems to... Do you see that kind of imbalance in our sector as well, specifically?
Well, definitely, the part of the stack that has suffered the most since 2022 has been growth. Yes, C onwards has been the one that is down more than 50% since the peak. In the rest, but then you have this weird concentration phase that goes all the way from seed and up. Look, this will, in 5-10 years, this will look very different. It's a particular phase of the industry. The industry responded to a downturn with concentration. Now, if concentration ends up making a ton of money to LPs, then that trend will most likely stay. And then you might end up in a PE-like world where you have 4 massive whales, KKR, Blackstone, and so on, and then everybody else is a small, right? You could end up there, but to get there, you need returns. And I think it's too early to say whether those massively concentrated portfolios with VC-like risk, will deliver. Yeah. But nothing in VC happens overnight, right? These are 10-year funds. There's ways where you can mark your books to an extent, the way you want. It will take another 5 years minimum. Yeah. The incentives in the system are such that it's very hard. You don't have a mark-to-market business. Yeah. When you operate in public equity, or in commodities where I come from, you have real-time marks, every time, every minute of the day, exactly where you are. VC is like the exact opposite of that.
How do you do that? How do you cope with that? I mean, it's just like, it must be so much flux.
Yeah, that's why the industries attract different types. Yeah. I think on average, the VC industry is much more industry of storytelling, of like qualitative stuff. And yeah, look, again, it's too early to know how this ends, right? What we know is that we just don't like hypes. We like coming into ideas and themes before they hype. And when we come into business, we just want reasonable valuations. Knowing that, a great business, quoting Charlie Munger, a great business will always be more expensive than, a badly run business. Yeah. So you pay for good businesses, but it doesn't mean that you have to pay $1 billion for a seed company.
Yeah. Yeah, absolutely. And are you finding now, is it a good sweet spot for reasonable valuations when you're looking to deploy?
Oh yeah, 100%.
Yeah.
Right now, you could, in the US, you have founders everywhere, right? Because so many people have just completely stopped deploying. But we don't want a 100% US fund, right? So we have to balance it. I think in Europe, the slump has happened earlier. So to an extent, it's like business as usual compared to what we've seen in the past year or two. In the US, it's really been, especially, outside of AI, it's been like a massive change in the past 18 months. Yeah. Ever since it became clear, right, that there was going to be a change in the administration.
Yeah, absolutely. Yeah, it feels like the last 6 months feels like there's been enough movement really to last kind of 3 years or something, right? It's all happening super quick,
yeah,
right?
I know. Yeah, it will, for sure.
So give us a prediction on the future then. Where are we heading?
In terms of technology or in terms of what?
Let's look at a couple of things. Where are we heading around kind of growth of the sector? So I'm thinking more about technologies, being deployed and commercialized, and more exits, kind of more success stories.
Yeah, look, I deeply believe, but other people will give you the other way. I deeply believe that for venture in particular, it's the age of specialist funds. Yeah, it's very hard to say, okay, this month I'm going to do a deal in LLMs, and then next month I'm going to do a deal in synthetic biology, and then the next month I'm going to do something in, the built environment. It's really hard to do that. And of course, big funds have like massive platforms to help on the DD. But I think in the end of the day, it's you, the lead investor who will be helping these founders and sitting on their boards and helping them. And how can you really help them if you don't really know the industry they operate in, right? You will just make, and I think it happens to all of us. You sit on some board and there's some random VC investor who knows absolutely nothing about the space where these founders operate in. And they try to make connections, with like other things that they've seen. And, at best, it's just like noise. At worst, it becomes, wrong guidance. And so we are deep believers that we are going into a world where specialism in VC matters more and more.
Right, absolutely.
Without being necessarily expert, yeah?
Yeah.
There's a fine line there, because if you are too entrenched in a space, then you will always see things with the incumbent's eyes. And you'll be like, this is never going to work, yeah? That doesn't work either.
Yeah,
you need to
be a fine line, isn't it?
Yeah, and I think personally, what really helps me is the fact that every Monday, when we have all the ICs and the pipeline meetings, I hear people that come and pitch, or like all these other, or I have to read these long memos, which I particularly like. And you read about all these other industries, right? And so that always keeps your mind open. But there's a danger between being an expert and a specialist, yeah? You have to be somehow a specialist that maintains eyes open and understand how things will change, because everything will be different in 10 years, as it always is.
Yeah. But if you're bright enough and you've got the right mentality for things, can't you become can't you become a specialist in whatever? If you have enough kind of, exposure.
Sure. But it's not, what makes you really valuable with these founders is not that, that I just spent 3 hours on ChatGPT informing myself on a particular industry, right? What makes you really valuable, your value in the end of the day as a VC investor is the quality of your network. It's as simple as that, right? Who trusts you? Which doors will you be able to open for these founders? So you can be an extension of them, right? Life is tough as a founder, right? If you have people that somehow help you and, cheer for you and open doors on your behalf, that makes your life a little bit easier. Yeah. And that's what you need to do. And developing trust and being able to open doors is not something that happens overnight. It takes years, right, to develop a particular recognition and trust within an industry so that people will say, okay, you asked me to speak to this person. I trust you. So I'm going to take half an hour to speak to this person. Yeah. I mean, how many emails do you get every day that you just delete, because there's no context. They didn't come from a trusted source.
Yeah, absolutely. I get that. And listen, I could talk to you. I know we had discussed about 5 other topics to run through today, but I don't think we're going to make it. Because I know you need to get back to your job, right? So, but really enjoyed the conversation. Thanks so much for coming on. Loved hearing about your journey, your inspiration, some of your, really interesting as a 19, 20-year-old, right? And some of your formative experiences. And then the role at Goldman that led you to this, and then the journey from, 2017 onwards, really. And it's been fascinating. I really enjoyed the chat today, actually.
Yeah,
so
thank you.
Thanks so much for coming on.
Thank you for the chat. And for the listeners, for the younger listeners, I think my advice is always try as many things as you can, as early as you can in life. So you tick boxes, close things that you don't really like. You don't want to spend a life in academic preparation just to then land up in a world that is not really fit for what you want to achieve.
Yeah, no, awesome. And you just never quite know where the inspiration is going to come from, do you? Right. So there we go. In kind of Syria years ago with all your pals from the drilling community and a career in energy. But
let's see in 10 years.
Yeah, exactly. And to all the listeners, thanks for tuning in. It's been hope you enjoyed the conversation, and we'll see you on the show next time.